What's going on, great and fantabulous people out there in the world of Earth realm? I appreciate each and every one of you guys. I think you guys are awesome, except for the people who leave, crappy comments. I hope you go through whatever you need to go through to become a better person. That's my passive, aggressive, balance, neutral way of saying, you know what? I believe that everybody, if they go through enough things, can make the right things, can make them a better person, but can also make you a bad person too. Been there, done that. So, speaking of bad things, let's take a look at the new IRS Form 1099-DA or 1099-DA. What is this and what does it mean to you? Now, to most of you guys, this won't mean anything, but to those people who are interested in everything that are tax and or are into crypto, which is going to be the future, so get yours now. Just throwing it out there. This is a new tax form for reporting gains and losses for cryptocurrencies. Yeah, because government goes, oh, we don't believe that's real money. That's crap. But now they're trying to get their share. Kind of funny how they were all against it. And now they're like, well, we we want a little of that little of that cheddar as well. So let's take a look. So the key takeaways here is that cryptocurrency platforms will start to issue the 1099 DA in early 2026. The form contains a record of capital gains and losses, and an identical copy is filed with the IRS. It's likely that Form 1099 DA will be inaccurate if you transferred crypto into or out of your exchange. So there's going to be problems with it already. All right. So a shot goes out to Coin Ledger for putting this together. We're gonna not use all of their information, but or what they put together. Okay, so starting in 2025, they're sweating you down. You'll receive it January 1st. Looks like they'll give you a warning letter if failure to address the warning letter will likely result in penalties and potentially an audit. All cryptocurrency brokers are required to issue it, which I would argue to say that only the ones within their jurisdiction. Who is not required to form to fill out to report the form 1099-DA? Miners, node operators, other parties who validate transactions on the blockchain, software developers, stable coins and NFTs over 10,600. Oh, looks like you can thank Biden for that one. So it says in this case, gross proceeds are how much you received when you dispose of the cryptocurrency. Meanwhile, cost basis is how much you paid to acquire the cryptocurrency. So that's a problem because investors often transfer their cryptocurrency between wallets and exchanges, and they have trouble tracking cost basis. So let's run through. Let's see here.
Example, tracking cost basis. David buys BTC on exchange A for $10,000. David transfers his crypto to his cold wallet. David sells BTC on exchange B for $15,000. In this case, David should have a capital gain of $5,000. However, exchange B won't know his original cost basis. His cost basis will likely be reported on Form 1099-DA as missing or unknown. In this
That's a
case,
that's a
David is
problem.
responsible.
Fair use for this information, by the way. It's on the internet, and we're only using it in part, so sampling. But yeah, they're going to put missing or unknown because they don't know. So that's a problem. How can you accurately calculate a tax obligation based on this then?
Responsible for proving that he originally bought his BTC for $10,000. Otherwise, he may be responsible for the full $15,000 of proceeds. As you can imagine, this can cause stress and confusion for taxpayers who haven't kept complete records of their crypto transactions. To prevent situations like these, you should complete records of your cryptocurrency transactions. Alternatively, you can use crypto tax software like CoinLedger to track your gains and losses automatically. Crypto Tax Savings Secrets Eyes. Download the free guide that's helped our customers save more than $50 million in crypto taxes. Send me the guide. Downloaded by 10,000 plus investors. Will 1099-DA change how crypto tax reporting works? In anticipation of mandatory 1099-DA reporting, the IRS now requires that taxpayers use the per-wallet method to track capital gains and losses. Previously, taxpayers were allowed to use the universal method, which assumed all of your cryptocurrency came from the same tax lot. To better understand the differences between the universal method and the per-wallet method, example, understanding per-wallet method. Brian buys 1 ETH on exchange A for $2,000. Brian buys 1 ETH on exchange B for $3,000. Brian sells 1 ETH on exchange B for $3,200. With the previous universal method, Brian's ETH on exchange A and exchange B would be treated as one tax lot. If Brian was using the first in first out method, the first ETH he acquired would be the first that he disposes of, regardless of where he originally purchased it. In this case, Brian would report his capital gain as $1,200, $3,200 to $2,000. With the per-wallet method, the ETH on exchange A and exchange B are considered two separate lots for tax purposes. Because Brian is selling his BTC on exchange B, he must use his cost basis for his BTC held on exchange B. As a result, Brian's capital gain is $200, $203,000. The IRS shifted to the per-wallet method so that it would be easier to track taxpayers' capital gains and losses from each individual cryptocurrency platform. Even after the shift to the per-wallet method, Your Form 1099-DA may still be inaccurate if you transferred crypto across wallets/exchanges. To track your capital gains and losses, you'll need your original cost for acquiring your cryptocurrency. Will Form 1099-DA cause issues if I haven't reported crypto in the past? If you haven't reported your crypto taxes in the past, you should submit a crypto tax amendment to avoid potential fines. Once Form 1099-DA requirements go into effect, it's likely that the IRS will discover your previously unreported cryptocurrency income.
Now, some people would think that this is a violation of privacy, if you really think about it. I mean, one could argue that, well, there's lots of points to argue, but I should be able to do business privately. Why are they looking into my affairs? But see, that in itself gets negated because if you're operating as a U.S. citizen, that of which your name has been tainted by your driver's license, your state birth certificate, you, public contacts, your voter registration, etc., and it'll never be removed or freed. It's always going to be a slave in their system for them to use to harass you. And anywhere you use that, it is, well, you're a member of theirs. So if you're going to do things underneath their name that they're responsible to do and deal with, then it's taxable. So what we need to start doing, good people out there, is creating domestic tax exempt entities because then they're US based. So we're in the belly of the beast, but it's tax exempt. We have an EIN for it, and we don't have to worry about all the rest of it. Still need to set up a bank account and whatever else to receive it. So if you need help, contact me or somebody who is trained or, a professional like a CPA or whoever, whatever that you need, financial advisor. I am not. I'm only self-taught. Okay. And so it would be considered a private consult or advisement, and no responsibilities, financial, physical, material, spiritual, social, etc. Do we take? Uh, so if you're going to do this, then it sounds like the best way is to create that entity. So to learn how to do that, you want to look up my video, how to properly get a domestic tax exempt EIN by James C Lovett or the Badwolf. And even if you don't use it today, you use it tomorrow or for other things. But like the IRS says under IRS code 25.1.1.3.3 under tax avoidance, a U.S. citizen has the right to minimize, reduce, or eliminate their tax obligations within the merit of the law, as long as they pre-plan the event. So pre-plan. But if you don't, then you owe. That's the game. Because then by default, or their version of default, you are their person. Person. Legal. Property. Cannon fodder. Janitor. When you should be the creator, the CFO, the true sovereign. We the people. That's it, guys. I'll talk to you later. So 1099 DA, cryptocurrency, some things to think about and some things to set up in advance. All right, guys, I'll talk to you later. Take care and Godspeed. God bless America and all the rest of you guys. And to the others, well, you'll catch up. Talk to you guys later. Don't forget to hit that bell, like, and subscribe before you get out of here. All right, I'll talk to you later. Goodbye.